Good morning, traders. Today is Monday, February the 13th, 2023, getting ready to kick off a new week, and this is our weekly market analyses and performance review. All right, let's get into it. This is a busy week, or at least it could be a busy week after last week's sort of light news catalysts. We've got some stuff that could potentially move our markets this week, and that's great for us as traders. Gives us some decent premium to work with. It's interesting as we look at the weekly. Again, we generally look at, there's our Theta Fairy trade just coming through. We generally look at a daily technical overlay as we are trading in the live trading room. But for this purpose, we want to look at a little bit bigger sort of 30,000 foot view. We look at the weekly picture, and we're still bullish across the board here with about 7 days of a downward move in the marketplace. We're still bullish. That tells you how strong the move up this year has been, starting really in January of this year. Some of our indicators obviously are implying that we are a little overbought, and it is stochastics that usually leads that way. That's one of the indicators that I put the most weight on. But you can still see we're above the 200-day moving average. That's a big key area for us. We're still holding on to that bullish overview, but it's starting to look a little bit worn, a little bit sort of long in the tooth, if you will. And you'll see here in a moment, our indicators are starting to sort of roll over. We don't really have any sell signals kicking in yet, but it looks like we're headed that way. We look at some of the key support resistance areas there. You can see some of the key areas for me that I look at on the downside. This is a big one right here. This is the February 2nd, February 3rd high that we have had so far this year. I'm also looking, of course, down here at VWAP. And I do think that that is the magnet for the market right now. You can see point of control is down in that same area. I believe that's where the market is looking to head right now. We'll see if that pans out or not. The black line down here, I call that the cliff. We've been down here many times over, going back really to the fall of last year. And it's acted as a pretty good support level, but we'll see as that develops over the next little bit here. But you can see that our technical indicators is what I was talking about. They are starting to roll over. We do actually have stochastics right now crossing and heading over to the downside. I think if we had a couple more days here of bearish action, we might be able to get the indicators flipped to more of a sell signal. But right now, still looking bullish overall on this trend that's been pretty darn strong here again for most of this year, starting January. We pull down a little bit closer and we look at the 2-hour candles, and this is usually what we are looking at as we are day trading in our live trading room. And you can see some of the Fibonacci levels and some of the key levels that I look at as a trader. We can take a look here at some of the specific intraday levels. Again here, levels for me for a bullish move. If we were looking to the bull side of the marketplace right here, right now as I'm looking at the E-minis, we're at 41.10. We're up about 10 points. And I would be looking at 41.85. Again, we're sitting at about 41.10 right now. So not 41.85, 41.27. Good grief. 41.27 to the upside. And then 41.48 above that. 41.69 above that. 41.89 above that. And then the big one here would be 42.11. That is the February 2nd high right there, February 2nd high. And that would, I think, be the target upside for the bulls. For the bears, coming down here, 40.87 would be the first target. 40.76 down below that. 40.60 below that. 40.47 below that. And then 40.31 below that. So those would be my intraday levels for today. Those will be really what we'll be trading off of as we start to initiate our 0 DTE for the day. We look at some key support resistance areas on all of the major indices using the ETFs, the SPYs, the Qs, the IWMs, and the diamonds. And you can see a couple of things again here, sort of illustrative of what our technicals have been showing us, which is the fact that we are still, even though the markets have been sort of stalling out here for the last 7 or so trading days, we are still above the red line there, which is the 200-day moving average on all of these major indices. The diamonds have really been stalling out, which they have just had an absolute just ripping run here in January. But other than that, guys, we're all still very bullish in terms of the price action, still above what we call the moat, the mother of all trend lines. And as long as we can maintain above that 200-day moving average, you're still in a bull mode. So as much as we are seeing some weakness here come in over the last 7 trading days, again, still very bullish to what we're looking at. We look at the year-to-date performance of these major indices. And again, I'll just make a plea once again for diversification and how important it is to really diversify your holdings. It is so critical, and this is why we trade different, distinct, disparate strategies on every single one of these indices. And they do give us a very nice blend of risk management and performance potential. So again, you know, the NASDAQ has still just been on an absolute tear. It was up almost 18% year to date, still up 13%. Again, the diamonds have been the index that have been relatively flat here, but still the S&P up 7% year to date. It's off to a really, really good start to the year. Will we see some regression to the mean? Probably, I believe so, and that's sort of how we're positioned in our portfolio. We look at sector rotation, and the two big areas of note for us in the trading room this week has been energy. Energy got a big bump off of that Russian news in their cut of their oil production. That pushed the energy sector up quite a bit last week. And then obviously communication services. XLC is the ETF that tracks that sector of the marketplace. Looking very bearish right now, and we're looking to put on a trade with that in our ATM, our Asymmetric Trade Management Investment Program today, in fact. So those are the two areas that we highlight this week in the market action. We look at the heat map from the past 2 weeks. This is 2 weeks ago, and then this is last week's action. And you can see that it's really a lot of just churning and coiling that's going on. There's really not a whole, when we look at the advanced decline line in our trading room on a daily basis, and you see these big massive moves potentially in the index, and then this is what you see from an AD standpoint. There's just not a whole lot going on in the marketplace right now other than a little bit of sector rotation and a lot of coiling taking place. Again, you can see 2 weeks ago it was the oil sector that got hit really hard. Of course, last week it was the strong sector. So we're just seeing a little bit of sector rotation going on there. Technology was really strong 2 weeks ago. It was weak last week. But in terms of the overall market, we're just sort of coiling here, getting ready for what could potentially be the next big move. We look at past 2 weeks performance, and again, we know that we've been off to a heck of a start this year. The indices have been performing really, really well. That was 2 weeks ago. This was last week's numbers. Finally starting to get some weakness, some pause to come in here. We'll see if that can sustain itself for the next 2 or 3 days. I do think that that's probably what we need, is another 2 or 3 days of market weakness to start to get these indices to roll over. Otherwise, it's just still status quo of a bullish trend overall. We look at the put-call ratio as a contrarian indicator. Again, when that put-call ratio is above 1 or below 1, it gives us a bearish or a bullish sentiment in the marketplace. How are people placing their bets? Options are used as a way to place a wager or a hedge or a bet on the marketplace in terms of whether you're bullish or bearish. And we look at those indices, and once again, and this is what we tend to believe is a little bit of a leading indicator in terms of the marketplace, the put-call ratio across the board is bearish. It is below 1 all across the board, has been for the last couple of weeks. And I do believe that that indicates that we maybe do have some downside potential here in the marketplace. We look at the expected moves for the week, and we are finally back up above a 100-point expected move for this week. That's largely due because we have a lot of news catalysts coming in this week. This is going to be a heavy news week. We'll take a look at that in just a second. Fear and greed sentiment reading. Again, that is a contrarian indicator. You can see we're still pegged up here in the greed category. We were 69 on our previous close. We were 73 a week ago. We are 70 now. So we're still sort of pegged up into that greed area. Again, when people are greedy, you want to be fearful. When people are fearful, you want to be greedy. So again, sort of an indicator that we're not necessarily overvalued or anything like that, but that the trend is starting to run its course. Maybe we'll have a little bit of a retracement here. We look at open interest. Open interest has not really changed that dramatically from last week until this week. You still see, again, a couple of the key pockets or areas that are a big focus for me. 39.55, and again, this is on the SPX, 39.55. Obviously, the big wall at 4,000 and then up at 4,100 and around 40.50. Those are the four key gamma walls or areas of sort of like a magnet that you're looking at that we focus on in the trading room right now. And again, that 4,000 level has been a really critical level. We look at the volume in the S&P and tapering off a little bit. Again, we generally like to see, that up above 3 million, but it's been sort of stagnant for quite a while, going back obviously to the fall of last year. Like to see it a little bit higher, but we trade what we get. So volume's been relatively stable. We said that there was a lot of news catalysts for this week. There absolutely is. We have Japan's GDP coming out later today. That won't affect our markets today, but it could affect them tomorrow. On Tuesday, we have the Eurozone GDP coming out, as well as probably the big catalyst for us this week, and that's going to be the US CPI numbers. Those are going to be pretty heavy. And then we've got a full day on Tuesday of Fed speak going on in the morning. So Tuesday could be a very active day. Wednesday, we've got oil inventory numbers coming out. We've got U.S. retail sales. We've got the UK's CPI number coming out. Then we have U.S. industrial production, which I think industrial production is a indicator that maybe doesn't get the respect or the focus that it should in sort of giving us a metric of how the economy is doing. But all of that comes out on Wednesday. Wednesday could be a busy day as well. Thursday, it continues. We've got jobless claims coming out. We've got our nat gas inventory numbers coming out. We trade both oil and nat gas in our live trading room. So both of those reports are important for us. We've got housing starts, we've got core PPI numbers coming out, and then a lot more Fed speak on Thursday. So it doesn't stop for us on Thursday. Friday, it lightens up a little bit, but we still have a lot of Fed speak going on Friday. You never know what that's going to mean for us. So we go from last week, which was a fairly light news catalyst week, to a very heavy news catalyst week this week. If you're looking for market catalyst, something that can drive the market up or down or push some volume into your trades, this is probably a good week to be trading. So a lot of news items this week. We look at our overall results in our portfolio, and you can see a couple of things. So on our zeroed ETEs here, it has just been absolutely fantastic this year with regards to the NDX. So you can see that we've had 30 days of trading opportunities, but we've taken 40 total trades. We're not able to double up and get 2 zeroed ETE trades in every trading day, but we try when the opportunity is there. And our general modus operandi is to start with the most liquid, easiest to trade, which is the SPX. And then as the day goes on, if we can book a profit on that, we can get our capital back so that we're not doubling up on our buying power. We look to the NDX, which generally holds its premium a little bit longer and generally has a little bit bigger premium. Well, this year, the NDX has had an above average amount of premium, and it has just absolutely been the standout for our zeroed ETEs this year. But we're off to a nice start, about 95% win rate on those. If we look at our 4 DTE trades, those have been nice as well. This past 2 weeks, we've had some really above average wins. We try to shoot for a potential return of about 10% per week on each of these 4 data expiration trades, both the SPY and the Q. We've been able to get those setups, but we haven't been able to quite match that return. We've had to get out of them early or take a partial profit. These past 2 weeks have more than made up for that. Close to a 17% return this past week on the SPY and almost a 20% return on the previous week with our Qs. So we're off to a really good start on our 4 DTE trades. Those are working quite well for us. Very happy with those. Our IWM, very excited about our IWM weekly strangles that we're doing. We're going to switch. We started last week with this. We're going to switch to a little bit more of a dynamic rather than static setup with this trade. We've never ever enhanced or adjusted the IWM trade during the week as it goes. If it makes it to profit, we just book that profit. We're starting to be a little bit more dynamic with that. We want to be careful with that because it does give us the potential to start creating losses as we enhance the trade a little bit return-wise. But I think that there's a balance there that we can use to try to get maybe a little bit better than the 1% a week or 50% a year return goal that we have on this trade. So far, we're 1 week in on it. It's been really successful for us. Last week, we ended up at about 1.3%. So about a 30% increase in our return over the week. We've had 6 total trade opportunities. Now, because we are trading it dynamically, we're going to have a lot more total trades. Whereas before we would basically just have 1 per week. But so far, all of those 10 trades have been winners. Our pairs trades, we just put 3 more pairs trades on. We've booked profits on the previous 3 pairs trades. So we've got those 3 pairs trades right now. They're up and working right now, and we should know over the next 2 to 6 weeks what the results of those are. We just barely started with those. Bear market trades, still at 4 total trades with 4 total winners so far this year. Our equity 4 DTE strangle strategy. We're up to 8 total trades with 8 winners. Now we've added back into the mix. Right now we're using Netflix as one of the tickers, and we've added PayPal back in. PayPal doesn't still quite have the return potential that Netflix has, but it is a little bit easier trade to manage. So very excited about that we're doubling up now on those trades. That should add obviously a lot more trade tally to what we're doing and hopefully enhance the return potential as well. This was an absolute just barn burner last year for us in terms of success. Again, this was one of the strategies that we didn't ever have a loss on last year, and it also had really good ROI. So excited to add PayPal back into the mix there. Our positive Vega DIA ladders, we're up to 6 ladders so far this year. All of those have been winners, no losers there. Coming in very close to around 8 to 9% ROI per month so far. Obviously, we're only 1 full month into the year, but that's what we're annualizing out at right now. So right on track, absolutely what we wanted to see out of that. Scalping, a little bit of a light week this past week. Tuesday, I was able to book a $200 profit, and then Thursday, I was traveling, and so we didn't do scalping on Thursday. But $200 is $200 more than I would have had I not been scalping. Our Dragonflies and our double diagonals and our zebras, we're looking here in the next couple of weeks to potentially put a couple new zebra trades on. Those have been really successful for us, but we need a clear directional bias in the marketplace. Those are directional trades. Our Dragonflies, this has been on BA, on Boeing, and we've had 2 of those this year. Both of those have been winners. We're going to look to do that once again on BA this week. So we'll continue to work that trade. Theta Fairy trades, we just booked a above average profit right now as I speak of $130 rather than the $100 normal dollars of profit that we booked. And that's 28 total trades this year, 27 winners, 1 loser. That has been an awesome trade for us. That is just the idea that you can wake up to an extra $100 under your pillow every day and do it with a fairly high consistency rate, fairly high probability of success. Pretty darn awesome. Our gold ladders have been a little bit of a challenge this year, but man, they have been good. 7 total trades this year. All 7 of them have been winners. And we are really well positioned right now in our gold ladder. Overnight vampire trades, we've had 1 of those come in. I think that our next AM expiration is March 17th, if I remember correctly. That was an awesome trade. Our goal there is to make about 10% return overnight. That's why we call it the overnight vampire trade. You got to stay up, but you know, if you're putting $100 grand in and you can make 10 grand, if you're putting 50 grand in and you can make 5 grand, yeah, you can go without a night's sleep and then you can take a nap the next day. But it's been a good trade. We've done 2 in the trading room, but just 1 officially here as a group. Our oil ladder trade it has been performing really well. 7 total trades there. All 7 of those have been winners. Of all of our ladder trades, our oil ladder is the one that has the highest potential return. So that's been a great trade for us. The ROI on that usually annualized out last year, is annualizing out this year at over 100% return. So it's been an awesome trade for us. Our in the money cover trade. This has been a big hit in the trading room, and I'll be putting out a training video this week on that. So if you're not familiar with selling in the money covers on an underlying, whether that be short or long, check out that video this week. But been a great trade for us. Really, really great trade from a risk reward perspective. And it has just been an awesome setup for us this year with some of the volatility that we've had. A little bit hard to find setups for that trade, but we are continuing to look to add to those. We've got a couple of them right now that are working still that haven't quite gone all the way through the 3 steps. And again, if you're not familiar with the in the money setup, look for that video later this week. Our broken wing butterfly ladder trade, we've put 3 of these on so far, and so far all 3 of them are winners. I'm probably going to change the broken wing. We'll see how this goes. I'm probably going to change the broken wing butterfly reporting status from the number of trades and winners or losers to more what we're doing with this short portfolio here. Let me talk about these. These are 2 new. strategies that we're putting into the trading room. We're always trying to add value to what you're doing. And we do have a very small short portfolio. This is actually built in my teenage son's account. And it requires $1,900 of buying power. It is shorting shares of overpriced stock, what we believe is overvalued or overpriced stock. And so far, it's up 9.7% in just a few weeks. So we report that short portfolio every single morning in our Discord discussion group and go over the new positions in there. But it's pretty exciting because it is a short portfolio. It makes money as things go down versus up. And it's a very small portfolio. It's $1,900 of buying power. And so there's a lot of appeal for a lot of individuals to look at that. But so far, that has been an awesome setup from a risk-reward perspective, too, for him. He's very excited about that. Our XSP Fly portfolio. So usually at least 3 times a week, if not more, I am going to buy roughly $10. Sometimes it's a little more, sometimes it's a little less, but roughly buy a $10 butterfly that goes out 1 or 2 weeks into the future. This is an incredibly asymmetric trade. This trade, again, you're spending about $10, and that trade has the potential to make about $400 of profit. Now, it's a low probability of success trade, very low probability of success. But when you can fail on about 90%, when 90% of your trades can lose money and you can still be profitable overall, it's a very asymmetric trade, putting up $10 to make potentially $400 back. 90% of these trades can and will probably fail for us, but it should be interesting to see at the end of the year what the overall profit is. And again, we're putting about $10 into these trades, and that $10 is coming ideally out of the profit of our 0 DTE daily trades. So we are never, ever, ever putting principal in this trade. We should never, ever lose a penny of our own money in this trade, because the only thing that we're putting into it is profits. Okay, so that's our XSP Fly portfolio. Just started that one up as well. The asymmetric trading method. This is our portfolio management passive asset allocation model versus trading model. For year to date, we're up about 4.5%. Market's up 7.15%. We're trying to beat the market and do it at less risk. And we're not going to keep up with the market when it makes 7% in a month. But we're doing pretty darn well so far year to date. And I do think at the end of the year, we'll have another good year just like we had in 2022 and 2021. So those are the results for our overall portfolio. If you want to come trade with us, we'd love to have you. You can go to try0dteforfree.com and come live trade with us for 7 days. Talk with our trading members about the program and what they feel is valuable or not valuable. You'll get a good idea of whether this is a good fit for you. We'd love to have you. We do have a double your money back guarantee. I think it's the strongest guarantee out there. If you come in and you go through our 4 hours of training and you follow the trading rules that we give you, and you don't believe that this is the highest value trading room online today, I'll give you double your subscription fee back. So there's really no risk to come trade with us and get started. If you are more interested in a investing passive portfolio, we do have that available as well. You can go to tryastforfree.com. And again, our goal there is better returns with less volatility. And we have a 2-week free trial for that. If you want to come scalp with us on Tuesdays and Thursdays, you can go to tryscalpingnow.com. Our goal there is $500 to $1,000 a day in profits. Sometimes we make it, sometimes we don't, but that is the potential generally on a good scalping day with one E-mini futures contract, $500 to $1,000. Trying to look to pull 20 points out of the market on those Tuesday, Thursday scalping sessions. So we'd love to have you come join us. Thank you for, once again, all of your comments and your input. Love to hear what you guys are trading as well. And I do believe, as Zig Ziglar says, you can get everything in life you want if you help enough other people get what they want. Appreciate your guys' support. We will see you in the live trading room here very, very shortly.